Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder for today's interview, the NYSE does not recommend investments or investment strategies. I'm joined today on the floor of the New York Stock Exchange by none other than Stephen Minar. He heads up the closed-end fund business for BlackRock. Steve, thanks for being here.
Thank you for having me.
Tell us what you're seeing in the closed-end fund space. What's been the interest, the demand, what's happening?
Yeah, definitely. We've seen a huge resurgence in demand given the low yields and volatile market environment that we've been in. And so we've seen investors looking for new sources of income, new sources of return, and they've really gravitated toward closed-end funds because they have several benefits given that closed structure. So for instance, you can earn higher income in a closed-end fund by using leverage. You can also hold less liquid securities, for instance, private equity securities, that may be able to amplify your returns over time. And so we've definitely seen a huge increase in demand. Also, what that demand has done is it's driven valuations a little bit higher. And what I mean by that is that closed-end funds have two prices. They have a market price, which is dictated by supply and demand in the market. They also have an NAV, and that's really just the value of the underlying securities. Now, often those two prices are different, and what we've seen is that the market prices this year have outperformed their NAVs, resulting in higher returns for shareholders.
And of course, that's talking about trading. But it's not just been in the trading, right? You've also seen a bit of a resurgence or growth in the IPO market. Tell us what you're seeing there.
Definitely, and so this year alone, we've seen $17 billion in assets raised in the closed-end fund IPO market. And just to put that in context, you'd have to go back over a decade to find a similar level of assets raised. And so, again, this resurgence in demand is driven by some innovation in terms of the closed-end fund structure. That would be things like removing the upfront load. And so now investors can get in at NAV on day one and pay essentially no cost at the IPO. There's also a limited term structure that we've implemented, and that gives investors liquidity at NAV in the event that a fund's trading at a discount.
Now, you've mentioned to me this idea that closed-end funds have become closed-end fund 2.0. What is it what's changed? What's been the difference?
Definitely. So I think the first is, again, just reiterating some of those structural enhancements that we've made to remove the burden of the cost burden on the shareholder up front at the IPO, and now BlackRock covers all of those fees. We've also, again, added that limited term, which gives you that liquidity at NAV. But one other thing that we've looked to do is really democratize access to alternative investments in a more efficient structure. So closed-end funds trade on the New York Stock Exchange, giving you intraday liquidity. They also will give you no performance fees, and then also they'll give you 1099 tax reporting. So again, just a more efficient way to get access to these private investments.
And I think stay there for just a moment. You know, what is it about the structure that precludes itself maybe to using private investments?
Definitely. So the closed-end fund structure, again, that word "closed" means that we're not subject to inflows and outflows on a daily basis like you would see in an ETF or a mutual fund. But also, I think the reason that we think private investments are so key is that going forward, again, investors are going to be challenged to meet their income and return objectives. So just to put it in perspective, a 60-40 portfolio we think can grow about 5% annually over the next 5 years. That may not necessarily be what investors need, and so you can again amplify your returns by accessing less liquid securities like private equity, which we expect to return about 20% annually over the next 5 years. So again, that the combination of the public and private markets and using that closed-end structure can help investors meet their income and return objectives going forward.
Well, Steve, thank you very much for joining us. We are live from the floor of the New York Stock Exchange, the corner of Wall and Broad Streets, the home of closed-end funds.